You're watching Resource Intelligence. We're live at the World Resource Investment Conference in Vancouver, where thousands of investors have come today to find out more about exploration and mining projects around the world. I'm joined right now by Brian Maher, the President and CEO of Prodigy Gold. Thanks for joining me.
Great to be here, Doug.
So your Magino mine project has had incredible success. It's become a bigger and bigger deposit with just about every drill hole, and you've got a new estimate coming out shortly as well. Give us a quick background before we get into the results.
Well, we put our last resource estimate in November of last year, and then followed it up with a preliminary economic assessment, or PEA, in December. That outlined a deposit with a global resource of 3.9 million ounces at about a gram. The interesting thing was, the PEA that was done on that data, that established the economic profile for the deposit, showed that we could actually mine it at a higher grade, at almost 1.2 grams, and still produce almost 2.7 million ounces of gold. So that was kind of a key to us. It made us recognize that, there's a higher grade part of this deposit, and in fact, we still haven't seen the edges of it. So we embarked on a 60,000 meter infill drilling program.
Huge.
And as you noted, with each hole, we continue to see that either better grade or wider distribution of grade throughout the deposit. And that gave us the indication that we really didn't have a handle on the full scope and the ultimate size of the system. And so that's why we're doing this new resource update. We really have to have an idea, both for ourselves as well as for the investment community, just how big this deposit can be.
It's funny, Mike, because the resource, your numbers from the PEA were huge. You almost hit $1 billion in net present value with your existing resource. So the question it must be asked, I guess, how much do you continue to drill, and do you need to continue to drill, as opposed to just doing some infill drilling and getting the resource up to measured and indicated?
Well, that's a great question, but you have to put it in the context of what is going to happen in a mining project. Unfortunately, one of the difficulties in our industry is we are dealing with Mother Nature. And as much as we drill, as much as we interpret, as much as we think we understand, every deposit is unique. So as we continue to grow the size of the deposit, we're not just focusing on the biggest ounce number. We're looking to outline a large block of mineralization that we can then build a mine plan which effectively generates the best economic return for our investors and shareholders. The larger size simply gives us more flexibility and more options or alternatives to how we mine it. Do we go after higher grade material? Do we go after high grade plus lower grade material and perhaps treat it separately?
Okay.
As long as the deposit continues to grow, it gives us that optionality, which is often not present in smaller deposits.
Gotcha. Take us through the next steps. What has to happen before you can move on to pre-feasibility?
Well, and that's why this resource number is really key. We'll have that in hand. We'll study what that number looks like. But the model it generates also gives us an idea of how much more drilling we may need to push all of that material into the highest confidence resource categories, measured and indicated, so that as we plan for pre-feasibility study at the end of this year, early 2013, we have the maximum number of measured and indicated, or M&I ounces. The key there is simply that the next step is to generate reserves, to prove the economic viability. That can only be done by looking at those top quality resource categories. So that'll be a real focus going forward.
Okay, good. Give us the top reasons that investors should take a really close look at Prodigy Gold.
Well, I think number one is the deposit itself. When you look at the grade, when you look at the grade distribution in the deposit and the metallurgy, 95% plus recovery, the fact that it outcrops right at the surface, it's very easy to get to. That really makes it stand out against other projects that are under development throughout the Western Hemisphere. Then you mix in with that the infrastructure question, and that's something that always comes up. We're in an active mining district, a brownfield environment. There's a gold mine operating right next door, so we already have power to the property. The rail line's only 3 kilometers away. Roads are right there. There's a trained workforce. We're not talking about developing something, in the far reaches of northern Canada or out in the middle of the jungle. This is an active mining district in Ontario, one of the best places to be building a mine.
Great resource, great infrastructure.
And I think the other thing, I think this really distinguishes us from the other companies, is our team. We have put together a top quality mining engineering group that has, throughout their career, built and operated gold mines on a global basis. So when we say we want to make that transition from being a developer to gold miner, we not only are saying that, but we brought on the people who can actually do it. And I think when you compare us to what some of the other people who are trying to make that same transition, our team stands head and shoulders above the rest.
Yeah, it's a real indicator that you're moving ahead by taking on these new people for those positions. Brian, thanks a lot for coming in and talking to us.
Doug, it's always a pleasure.
Cheers. Investors can find out more about Prodigy Gold by going to www.prodigygold.com, and Prodigy trades on the TSX Venture Exchange under the symbol PDG.